Hello students, welcome to my YouTube channel Rising Sun. Today in this video we will be discussing about chapter 9 standard 12 commerce. The name of the chapter is analysis of financial statements. So first we will briefly understand what are financial statements. So financial statements are balance sheet and profit and loss account. Now balance sheet shows the financial position of a firm as on given date, while the profit and loss account indicates the profit earned or loss incurred by the business during the year. So first we will try to understand how balance sheet is and what are the components of the balance sheet. So the balance sheet consists of assets and liabilities, and on the right side of the balance sheet you can find assets, and on the left side of the balance sheet you can find liabilities. Remember students, balance sheet is not an account, it is a statement. It is a statement showing the assets and liabilities as on given date. Now these liabilities can be further divided into non-current liabilities, which are long-term or fixed liabilities. Non-current liabilities are also called as fixed liabilities. And current liabilities. So liabilities can be divided into non-current liabilities and current liabilities. The obligations arising due to current liabilities is for short period, that is the payment has to be made or the liability is cleared within 1 year, while non-current liabilities are long-term liabilities which are again divided into two. One is owner's fund or shareholders fund, and other is borrowed fund. So non-current liabilities are further divided into shareholders fund, which is also called as owners fund, and borrowed fund. Shareholders fund consists of the share capital, which may be equity share capital or preference share capital, and reserves and surplus. While the borrowed fund consists of the funds raised by borrowing money from the outside people, the third party liability, which may include from the people or banks. The borrowed fund examples can be debentures, which are issued by the company for a period of more than 1 year. Other examples may be bank loan, loans can be again divided into two forms. One is secured loan and the other is unsecured loan. And current liabilities examples are creditors. Some example of current liabilities are creditors, bills payable, bank overdraft, etc. Similarly, assets can be classified into fixed assets, which the business holds for more than 1 year. The benefit arising due to the fixed assets is for long term, that is more than 1 year. And examples of fixed assets can be building, land. You can take examples as land and building, plant and machinery, which are tangible fixed assets. Even furniture, these are all tangible fixed assets. And goodwill is an fixed asset which is intangible in nature. Some other examples of intangible fixed assets are patent, trademarks, copyrights, etc. Similarly, the assets can be divided into fixed assets and current asset. These are the short-term assets which can be converted into cash within a period of 1 year or less than that. Examples of current assets are debtors, stock, bills receivable, and cash, etc. Also, assets can be divided into the third one, that is fictitious assets. Examples of fictitious assets are preliminary expenses or some deferred revenue expenses, like huge expenses on advertisement which will be written off for after more than 1 year. So basically assets are divided into fixed asset, current asset and fictitious assets. Fictitious assets cannot be realized into cash. Liabilities can be divided into non-current liabilities, which are further classified as shareholders fund, borrowed fund, and other is current liabilities. So in this way, this is the horizontal form of balance sheet. Now the same balance sheet for better analysis can be shown in the vertical form. So to show the balance sheet in the vertical form, liabilities can be called as sources of fund. So now the same balance sheet we can express in the vertical form as follows. Liabilities can be, it's sources of funds. sources of funds. So here we can first write shareholders fund. The liability we are expressing the balance sheet in the vertical form. Shareholders fund will include equity share capital, preference share capital if any, and from that we will reduce any fictitious assets. Before that we will also add reserves and surplus first. We will less fictitious assets. And we will be getting net worth, which is the shareholders or owners fund. Then below that we will be writing borrowed fund. We will call net worth as A, borrowed fund, which will include debentures. Examples: debentures and loans, long-term loans which may be secured or unsecured. So let's call the total of these two as B. So now the total of A and B will be the total liability, that is source of fund. Then below this we will write assets, which will be called as applications of funds. So here assets can be called as application of funds. We are just following this balance sheet which we have shown in the horizontal format. See, first we have taken all the details of the liabilities, and instead of writing assets besides this, we will be writing all these assets below liabilities. So in application of funds we can write first fixed assets, which can include land, building, plant, machinery, furniture, motor vehicle, etc. Any investment made by the business will come after fixed assets, and then comes working capital, which is nothing but current assets minus current liabilities. Working capital is current assets minus current liability. Taking the total of all these, we will get the total of assets, that is application of fund. In this way, balance sheet can be represented in the vertical format, and comparative analysis or analysis in the form of common size statement can be done for better understanding of the financial position of the firm. In this video, we will be discussing the comparative balance sheet by referring problem number 5, page 352. Let's understand the problem first. We can see here that in the problem they have given us a horizontal balance sheet where they have shown assets and liabilities besides each other. We have been given the data for 2 financial year. As we can see, this is 1 financial year and this is the 2nd financial year. Similarly, data for 2 financial years for assets are also been given. Now we have been asked to prepare a comparative balance sheet. Comparative means we are comparing the data for 2 consecutive years. For example, you can see here, if you consider share capital, the share capital as on 31st March 2019 was 2,50,000 and as on 31st March 2020 it is 3,70,000. So if you compare the data for share capital, we can see that the share capital is increased in the next consecutive year. Now if we convert that change, 2,50,000 has been changed to 3,70,000. This change, if we express in percentage, it will be more easy to understand the changes in the company during that particular financial years. All these individual items or components of the assets and liabilities are expressed as percentage change. So naturally, when we are comparing the data, we need data for 2 years. Then only we can compare the data. If only 1 year data is given, we cannot compare. To compare anything, we need 2 consecutive data. So now we have to first write down this balance sheet from horizontal form as given in the question to the vertical form and find out the changes in the individual components or items of the balance sheet and express them as percentage. So let's solve this problem. First, we can see here, just as we discussed, we have been given the liabilities and from this we can classify share capital and reserves and surplus, these 2 total, as shareholders fund. Secured and unsecured loans will come under borrowed fund. So all these 4 will be non-current liabilities, or you can call as fixed liabilities, which are of long-term nature. Out of that, share capital is a permanent liability. Then in the fixed assets, in the asset side, we can see we have been given fixed assets and investments, and the difference between current assets and current liabilities. Current assets minus current liability will be working capital. So you can see here the current asset for 2019 is 1,30,000 minus current liability for 2019 which is 1 lakh. So working capital will be 30,000. Similarly, current assets for 2020 is 1,20,000 minus current liability 90,000. So current asset 1,20,000 minus current liability 90,000, working capital will be 30,000. Let's express this balance sheet in the vertical format and just calculate the percentage. Now first I will start with liabilities. Instead of calling liabilities, I will call it as sources of funds. So here we can see we will be writing this balance sheet in the vertical format with first sources of fund, and in sources of fund we will have two cross items, that is, one is owners fund or shareholders fund and the other is borrowed fund. So first we will refer the balance sheet here, share capital and reserves and surplus both will come under owners fund. We will write it one below the other as mentioned here, share capital and reserves and surplus. If there is any fictitious assets, we can see here there is no fictitious assets in the asset side. If there is any fictitious assets, we will reduce it from the shareholders fund, that is share capital plus reserves and surplus minus any fictitious assets. If given in the asset, we will get net worth. Below that we would be writing borrowed fund. Examples of borrowed fund are debentures, bank loans or secured and unsecured loans. So these both will come under borrowed fund. So we have written as borrowed fund with secured loans and unsecured loans. The total of these two will be the total borrowed fund. Net worth we will call as A, total borrowed fund we call as B. So total of A and B will be the total funds available. Similarly, instead of assets, I will write application of funds, fixed assets, investments, both I will be writing below. As you can see here, fixed assets, investment, and below that working capital. And what is working capital? It is nothing but difference between current assets and current liabilities, that is current assets minus current liability is equal to working capital. So if we take the total of fixed asset, total of investment and working capital, all three together will be the total of asset, that is application of funds. Now let's write the data and solve the problem. First, sources of fund, share capital. We can see here share capital in 2019 was 2,50,000 and in 2020 was 3,70,000. So we will write it 2,50,000 and 3,70,000. Reserves and surplus was 60,000 in 2019 and 1 lakh in 2020. Let's see. We can see secured loans similarly is 1 lakh and 1,60,000. First we will write the data. Unsecured loans are 90,000 and 1,40,000. Similarly, let's see about the assets. As you can see, fixed assets is 3,50,000 and 5,70,000. Investments are 1,20,000 and 1,70,000. So now about working capital, we can see the current asset is given in the asset side and the current liability is given in the liability side. So now first we will write current asset, below that current liability, and then we can find the difference. So current asset for 2019 is 1,30,000. And current liability for 2019 is 1 lakh. Similarly, we can see the current asset for 2020 is 1,20,000 and current liability is 90,000. We can get the difference of current asset and current liabilities. Current asset minus current liability. We will get 1,30,000 minus 1 lakh, that is 30,000. Similarly, 1,20,000 minus 90,000 is 30,000. Let's take the total. We are getting here the net worth is 3,10,000. The total of both is 3,10,000. Similarly, total of these two will be 4,70,000. Now similarly here we will take the total of the borrowed funds for 2019 and for 2020. Now you can see that this is A for 19, 4,70,000 is A for 20, 1,90,000 is B for 19, and 3 lakh is B for 20. So we'll take the total. We can get the total funds. So A plus B is total funds available for 19. A plus B total funds for 20. This is our balance sheet total. Similarly, we will take the total of fixed asset, that is 3,50,000, investment, that is 1,20,000, and working capital, that is 30,000. $3,50,000 plus 1,20,000 plus 30,000. Similarly, for 2020, we will be taking the total of fixed asset, that is 5,70,000, investment 1,70,000, and working capital 30,000. So we can see that the total funds available and total funds applied both are same. You can see here. Hence our balance sheet tallies. Now, after writing this in the form of a vertical balance sheet, we will just find the change. If we see share capital, it was 2,50,000, which has been changed to 3,70,000. So the change will be 1,20,000. 3,70,000 minus 2,50,000. So we can see the share capital is increased by 1,20,000. So now we can find out the percentage change. To find out the percentage change, we will calculate it in this way: 1,20,000 into 100, so that we can express it in percentage, divided by 2,50,000, that is the amount in column 1, 2019. In this way, we can calculate the percentage change. So this is 48%. Actually there is an increase. I will write here as increase. It's an increase. Similarly, we can find the change for reserves and surplus, which was 60,000, it is increased to 1 lakh. That is the increase by 40,000. And a percentage, to calculate the percentage change, again we can calculate in this way 40,000 into 100 divided by 60,000. It is 66.66. We can round it off or decrease the decimal. It is again increase. Similarly, we can also calculate for secured loan also. We can see that it has been changed from 1 lakh to 1,60,000. You can see the secured loans from 1 lakh to 1,60,000, that is 40,000 increase. Again this can be expressed, sorry, it is 60,000, I am sorry, 1 lakh has been changed to 1,60,000, which is an increase of 60,000. This we can calculate in the percentage as follows: 60,000 multiplied by 100 divided by 1 lakh. In this way we can calculate the percentage. It is 60% increase. So similarly for each and every item we can calculate. Now unsecured loans has also increased from 90,000 to 1,40,000, which is the difference is 50,000, and that 50,000 comes as a percentage, that is 55.56. Similarly, we can calculate or express this in terms of absolute change. It is 51%. Similarly, just we have to calculate the percentages. Can calculate as a percentage. In the same way, now we can calculate the percentage change for assets also. We can see here fixed assets has been increased from 3,50,000 to 5,70,000. So the difference between both is Let's calculate the difference. 2,20,000. This 2,20,000 percentage increase, you can see there is an increase. This increase can be calculated in terms of percentage by multiplying 2,20,000 or this figure into 100 divided by 3,50,000. Which comes to, let's calculate the percentage. So in this way we can calculate the percentages for both all the other components. You can see here working capital, there is no changes. There is no changes in the working capital, while the negative figure here will indicate the decrease. You can see current assets and current liabilities are appearing as negative figure, so it is decreasing. So see, we can see here current assets was 1,30,000, which has decreased to 1,20,000. Current liabilities from 1 lakh to 90,000. So there is a decrease. We can write here as increase. This we can, in this way we can form a statement. So here this is the problem from the textbook which we have just discussed. We can see here in the answer, even in the same way they have expressed it. Share capital 48% increase, 66.67 reserves and surplus increase, 51.61% there is an increase in the net worth. In this way we can write the percentage and mentioning whether it is increasing or decreasing. So here we can write it. Can add another column even. Can write remarks. So it is increase 66.67% increase, 51.61% increase, 60% increase, 55.56% increase, 57.89% increase, here also the fixed assets and investments are increased, but we can see current assets are decreased, even the current liabilities is also decreased, with there is no change in the working capital, and here the total of the assets is also increased. In this way we have to prepare a statement. So one important thing is that we have to express the balance sheet from horizontal format given in the question to vertical format and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures given for 2 consecutive years, and compare the figures gi take the difference and express that difference as a percentage change, mentioning whether it is increasing or decreasing. You can see here in the solution also. Hope students you could understand this problem clearly. I hope this video was useful to you. If you find this video useful, please like, share and subscribe to my YouTube channel. Thank you.